What's going on, traders? Hope everybody's having a great weekend so far. My name is Shark. Thank you so much for joining me here on this week's edition of the market analysis and recap. Here we're going to go over the E-mini S&P futures. We're going to look at some weekly charts, some daily charts, and look at some day trading levels as well. And of course, do the same on NQ, the NASDAQ 100. And we'll also take a quick look around at some ancillary data that I like to look at to help me formulate a game plan for the upcoming trading week. And before we get started, we're going to, of course, look at some of the economic calendar updates that we have for this week. And also, we're not quite into full swing of it yet, but earnings are coming up around the corner once again. So we'll keep you guys updated on that as it progresses. Of course, this video is for educational and entertainment purposes only and in no way should be viewed as financial advice. All right, let's get into the economic calendar for this upcoming week before we do anything else at all. And let's take a look here. Where do we have our calendar? Okay, let's pull it up. All right, so Monday the 13th, really not too much going on here. Have a little bit of Fed speak in the middle of the day. More Fed speak on the 14th. It looks like at 8:45 Bowman before the market opens, and a little bit right there from Waller as the market ends up closing at 3:25, and Fed Collins speaking then right 5 minutes later at 3:30. But we do have, of course, CPI Wednesday, October 15th, coming out at 8:30, so that's going to be big to watch, especially considering now with, of course, on Friday, we just announced that 100% tariffs on China products. And, of course, most of us saw what happened during the Friday session with the sell-off. Beige Book coming out at 2 o'clock on Wednesday as well on the 15th. Thursday, okay, we have PPI coming out at 8:30, and as well as retail sales, we have some more Fed speak at 9 o'clock before the market opens, and then nothing really too interesting after that. Friday, the 17th, nothing really too interesting for us in the morning that I am looking at. So there we go, CPI and PPI, really the big shiners of the week on the Wednesday the 15th and Thursday the 16th. So now let's get into some charts. Take a look at the damage done on the Friday session with the tariff news here. And the question is, is this the start of something or, just a pullback here and, overall. And I think that it'll be interesting to see how the market reacts over the next few sessions, because that will be really what's telling. We're going to start off here on the weekly chart. Now, I just want to bring out here the week of the 28th. Before we really go over anything, look at the size of this down candle, right? And this is probably 330 points, somewhere thereabouts. So let's just see. 200. Okay, I'm sorry. That's what I was saying. 230. I'm sorry, that's what I meant. 200. All right, this one's probably maybe 50 points more than that. Let's see. So maybe 260s. Yeah, about 40, 50 points more. Maybe 270. Okay, so this is not that crazy of a dip overall. And we're looking at a blank chart here, no levels, but what do we also talk about? What's the real area that would really start to concern me if we started to break under? Well, right, it's over here. We've been over kind of this zone ad nauseum, but this is really the level that's important to me. So we are technically good all the way down to basically 6,200 on the SPOOs. Really does no larger context structural issue. And we have been talking about this for the last couple of videos, right? The market could have needed after all these higher highs been put in, right? We were at the highest high up here. We needed some type of a pullback, a little reset, and before we can go ahead and resolve in the other direction. Now, of course, we're going to see. Now we've got a really well-defined range here for the last previous trading week, and I always like to go ahead and look at that 25 to 50% rule there, and we've been over that. If you have followed me for a while, that 25% is actually lining up in a real key area, right? The weekly lows of the 22nd. So that's going to really be that pivot zone for me, at least on the weekly chart as I look on here forward on the bounce. The low of that was 66.24. So 66.20s, and certainly by that 600 could be interesting. So that the most bearish scenario here then, would be if we do see a snapback, and I do think Monday we will see a move up. Will it go all the way up in the first day? I don't know. It's been a very, very strong market overall, so it really wouldn't surprise me. And then potentially either we look above and we come back, and then we fail straight back down, right? And that would really confirm that we are now in fact really getting in a downtrend here. But we had two break of structures here, one under that previous week low, and now we're 2 weeks back under this low here. And the previous week low is basically about that 50% retracement, right? So certainly if the bulls are able to bring us up, the other short area here around 66.83, if you want the precise low of the week of the 29th, 66.80 there. So you have two options. One, maybe we come up and then we hit again, and then we head down, or we've got the option of coming up a little bit higher and then head down like so. But like I said, the most bearish scenario is going to be that staying under that 25% ratio here. So if you are bearish, you want to see price kind of hang out like this, and then we go ahead and have that redistribution for the next move to the downside. But of course things usually obviously don't work out like that all the time. So we could even say that they overshoot, fake some shorts out, then go ahead and pile their way down, right? But of course if we start to see, let's take this away, if we start to see us get up over the 25%, right, we recapture the lows from the weekly lows of the September 22nd, right, end up hanging out up here, right? This is going to start to put me in more of a still bearish, but bearish to neutral type stance, right? Because then we have the potential opportunity of breaking over the weekly lows from the 29th over that 66.80 area. And then if we do in fact, delete that, start trading over here, now I'm in a bullish to neutral stance, right? And then ultimately we'll look to see about attacking the opposing side of the weekly range. Right, so we've got a couple of scenarios there. The big area again, this is it, right? And even here structurally we're really just coming kind of in to retap the part of this bigger balance, and I didn't even do that. Let me see if I can get it really to the tippity top there, because I think we're rather close, right? The weekly highs from the start of September. Right, so structurally even from here, boom, and it's back off to the races. Now we start seeing some price action, hang out down here. Then we've got another type of scenario working itself out. Right, so it's pretty clear there overall to me, at least from this weekly perspective, what's going on. And we're really okay, even though we're just slightly below. I would highly doubt, let's see, but I highly doubt that we close this week below the weekly 9 here on this booze. But let's see what happens. Okay, so let's get into a daily chart now. And we'll go into the chart we have been watching. we're working with. Oh, and actually what I wanted to do really quickly was I just want to take a peek. All right, a little bit of weakness. We've been watching this oversold on the weekly. Just a little bit of weakness coming in here now finally. A bit more aggressive coming out of it on the daily, but of course the daily looks like, you know, hell in a handbasket here. But you can more clearly see now. Right, this is that prior weekly low right here that we were talking about before. And here's the other weekly low. Right, but you can see here more close on the daily where we're just coming into the top part of this balance range. What was supply now turning into a potential area where rebids will take place. And see about that bounce. Now maybe we don't get there. Maybe, you know, we don't all the way get to the 22. Maybe we come into the lows. Right, that's why I said about 6,600, you know, start to open your eyes and take a look at what's going on. But that's still a great bounce there. I mean, that would be, you know, real nice trade if you're actually able to catch it. Yeah, about 80 points or so for the full distance, right? Okay. So we already have our levels here. We've got a pretty defined range here overall of what to work in, and I reckon that we probably try to trade this out. I would actually be interested to see. Let's take a look. This market profile isn't the best, but okay, so it doesn't, where we don't have a line for it. This is where we closed, so we sold off a little bit more in after hours. That's what it was. Okay. I mean, these single prints up here are interesting to me. This area of the profile is still pretty filled out from the prior day here. But this area here, pretty thin. I think that the structure there is a little weak and that we could potentially want to come up. Maybe make it 75% of the way. Maybe we do get all the way back up into 6,700 first. That wouldn't even clear it up. It'd have to be in the 6730s. So that would be a hell of a bounce. Let's see if we drift up into this area, maybe in this 6730s, another zone. 6730s where we could roll over from one if it fell out here and then potentially head back down lower. But let's see. Let's see what happens on Monday. All right, back to the charts here. We're going to get into some day trading levels for us. So let's look at those. Okay, I'm going to have to extend some levels down there, but one thing I did also want to point out really quickly. Oh no, it was the 6 hour. Nope, never mind. Alright, forget it. Alright, here we are. What do we got to see happen? Okay. Let's get price up and over 65.55. Let's see price hang out in this area here. We can get that. Look how far away even the 5-minute 9 is, right? Need a push up into 65.80 area, okay? But if you want the confirmation, I'd wait. I wouldn't even diddle in this area. I would potentially just wait to see if we can get up and over 65.80 and then, come up into 65.90. Up and over that, we can get into that last area. This is where that news came out in after hours. Here gave us an extra dump. I think regular trading hours closed around here, right around that 60, that 6600 area. So we'll see if we want to come back and retest yesterday's close. That would be the main thing I would be looking for. But even if I can catch along, even from the open into the 80s, up into the 90s, it's still a hell of a trade. Even the 10 points here is a hell of a trade too. And we're not in the real business of bottom picking here. So again, you got a first level confirmation if we can get and hold over that 65.55 area, but really we need up and over that 65.80, and then we can look to see if we can trade up into that, even that 5-minute 9 sitting at 65.84 as it stands. This will probably move down a little bit here in the Sunday session. Hopefully they don't bounce it in the Sunday session. Look for hopefully some consolidation, because then I'll have no choice but probably to short the New York Open. So if in fact we are able to break underneath now for the Bears, underneath 65.35, 65.38, okay, we'll look for that next lower low into 65.23, breaking under that. Well, then watch out, 65.10, 65.06 area is next, then back down right into the figure. 6500 is next, and underneath that 64.80, 89.90. Okay, but I really would be more likely to see either we get trapped in here, hang out in here, or we get a little bit more of a bounce, and we, over the next couple of sessions, we try to establish a new point of value in the market, whether that be a range like this, or end up being a range even this far. I feel like this is the more likely thing that we shall see after a big impulse move to the downside. So estimating what that range is going to be here will depend a lot on what VIX is doing and things like that. So we'll keep an eye on the volatility, but just remember now that we're going to have a lot wider ranges, so mind your stops and position sizing accordingly. All right, let's move it right along here and get into NQ and see what we can take a look and what we can potentially expect on the NASDAQ 100. And let's take a look here, and why don't we get into our weekly chart? Okay, and the SPOOs have been a little bit weaker overall. You can see here, comparatively, SPOOs were just a little bit below the weekly 9. NQ here has really been fueling that rally, has not even broken the weekly 9. So big spot here. It's sitting right here at 24,150 basically, but 30 points lower. Watch out for a potential sweep in the morning, recapture, and then rocket to the other direction. I would be very interested to see if we get something like that setting up. But the wick, I think, on NQ here a little bit more aggressive than the SPOOs, but of course, that's a little bit to be expected too, because, the higher you climb, the further you have to fall. You can see here, this pretty much did not even make it to the same weekly highs from even the 8th. That's pretty much where we stopped, right? So unless we really break under that, right? We'd have to break pretty much the daily, the weekly 9 here, under 24. So you see some daily closes under 24, 150. Watch out. That we could really show some weakness overall here for the markets. But same thing I'm doing on the weekly chart overall. Going to be watching those weekly lows from the 22nd, sitting right at 24,420 basically. Okay, and then the next weekly lows are 24,633, and that's again about that 50% here on this move thereabouts. So anything over that, I think we get real back in a full confirmation of a full bull. But until now, we are going to go, slightly bearish to bearish neutral until proven otherwise. So let's see what happens. I'll mark off both these levels just to have it here on this chart, right? We'll just throw that up. Boom. This is the same area that I get worried at for the SPOOs. So this is our line in the sand area. All right, we've got here. And we've got there. Boom. Okay, beautiful. So let's see. Let's see what they do. Do we get a snap back up into this area? Still would be bearish consolidation overall. Then we see if we can't take that next leg down, or bearish neutral. Right, or we have the two other ways. Right, bearish neutral, bullish neutral. Right, so if we can get some consolidation between 625 and 24,400 basically, about a 200-point range there. That would be the best thing. But as long as we stay under 24,420, I'm going to consider that the most bearish consolidation potential. So that's what we have there. Let's come and take a look at the daily chart. Let's pull up one of our working charts. Okay. Back into this big area here. So, and even under 100. Should be a little bit lower. Really should even come down to here, but this matches this high, so we're good here. So basically though, 24,100, 24,90. We'll see what happens. But let's see if we snap back. Got the lows from the 25th. That's around that 24,420. Right from the weekly. These are the two weekly levels. Right here. This low. And this low. I think really those are the most important things right now. Let's just pull up other. Oh, no, this is not it. This is it. Okay, just right back into this big zone. See, this one's a little bit wider. Just slightly different interpretation, but it's 50 more points that's giving it thereabouts. When I look at this just like this too, I'll probably also be taking a look here. Bottom of this balance range, 1, 2, 3, 4. Coming up into these highs. Right, so if we do overtake this and this is like the final boss right here at these previous highs. And the low from the 7th, 24.980. Highs here, 2,500, 2,500, and 27. So basically, about 20, 30 points. This is the low here is 84, and the highs here are 2,500. So yeah, about 20 points there. That's really the last spot. We start to see price, back over here. We're definitely good to go. All right, first boss, second boss, final boss. This is the Bears' chance. Do they fumble the ball once again? It certainly seems. It certainly seems so. All right, let's get into some day trading levels here. At 20 is pretty much that 50% retracement on the daily. Very close. 27,730. All right, some day trading levels. Okay. For the bulls. Well, of course, we got to hold this low. I mean, it's so damage ridden. Over 24, 475. That brings us back to about 400, 24, 390. Don't really recommend trying to buy the low. It'd be much better to wait to see. Come up, make a higher high, come back into here, and then take that long and target the 390. You know, probably not going to look that clean, you know, more than likely. You know, if we do it, it might dip just a little bit underneath, then come up and shoot, right? But the 275 area, you know, will be key as a pivot for me. And, you know, it's about that 50% of that last move down as well, right? So let's see if we get this for the bulls. We could hang out here. Let's say we reject, right? And if you're bearish, you got to call this out, this play, right? Maybe then we just push up, reject there, and then we head down for a lower low towards the 24,100. But let's deal with the bulls right now. And maybe we hang out here for a little bit, and then we finally go ahead and make that higher high, right? If you want even more confirmation, wait for this higher high to be broken, right? Over the 24,400, 24,390. Then we wait for a nice pull in, right? This was pretty much the close right here. Higher high, back over the close, break a structure. Now we can look for that next long to create the new higher high. Right into 24,573. Maybe we have a rejection there, right? Of course we could. Let's just say, come up, and we just see the rejection there. And then we end up, you know, selling down, right? So we could end up just rejecting here at this 24,480, right? This also could be another big rejection point. So would you be wrong to try a short here? No, but you really have to expect some type of a snapback. And it's the first short's always going to be like, I feel like this is the sucker short, right? Yeah, I mean, it's definitely an idea. It makes sense. Feels a little too obvious, though. The sell's been too overdone. It's always going to go a bit further. So, who knows? Maybe the short comes up at 700. And then we... But that's why we're going to look at, we look at that 4 hour, the daily, and things like that to find out, okay, where were those big areas on the chart that might be, of interest to us or something like that. Right here are some of those, daily levels we were looking at. Did I mark them off on this one? I did. Yeah, 406.25. All right, so there are those weekly levels here. Just on this chart, so we can just kind of see. And let's just look. And 50% is 24,755 is the halfback. So let's just do 55. It's kind of in this area. Right here. And then I'm just going to mark it. There we go. Boom. So the 50% is basically what this hourly 9 is. Almost where the 20 is. I bet this will catch up on the 30 minute. All right, so that's all we've got here. Okay, just for the bears, we've got a couple of counter trend short areas where we're looking at, right? But what if they just really looking bearish and just end up hanging out, right? Can't even get over 24,400. Well, the next lower low down to 400. And if we break 24,100, 24,25 area is the next one I've got under that. And then, of course, we'll look for 2,400 even. Another 20 points down. Right, if that breaks. And we'll see what happens at the figure. We'll see what happens there. All right. All right, let's look at some other data points. And, we were looking at a couple of these, and in the last video we did talk about the VIX and a couple of those. I think we had 2 or 3 red flags for me that were potentially talking about some type of a pullback being coming. And we did post one of them to my Twitter about the junk bonds, and we'll go over that again very quickly when we get into it. But VVIX here, or the one-day VIX, smashing over where it needed to smash over, right? Let's see if it stays over 21.5. If it stays over 21.5, watch out for continued volatility, probably up into the 31s, the 30s here. But if we start to see back below, well, then watch out. I think we'd come back down into 15. So watch out up here if we do stay up and over 21.5. right, like this. Okay, then we'll look for a move up like that. Breaking underneath. Well, then, whoops, break underneath. And then we'll just go ahead and retest this prior 15. And we'll see what happens at 15. Could get a bounce there. Now, this was one of the red flags I was talking about when we were looking at the market breadth here on the SPX A50R. How many stocks in the SPX are trading over their 50-period moving average? And I was noting to you guys the divergence here. Let's just pull up what we had on SPX. Okay. What we had going on in SPX. It's almost there. Here it is. Okay. Well, we had an SPX, right? We had these higher highs being put in, right? Up here, we just made a higher high. But yet, what do we have going on in the SPX? Breadth reading, right? We could not get on this higher light. Swing high, lower, high, lower, high, and now collapse. And now we are below the 50% marker for our SPX 50. So this now moved into bear territory. Let's see if we get a little bit of a snack back into the 50 and then potentially back down once again, or if we end up recapturing the 50% marker, and that would be the most bullish scenario. But up until now, this is definitely in the bear zone, and the divergence has worked itself out. Now we are back in step. Okay, making sense. All right, new highs versus new lows. All right, a breach of our zero line, but really down just negative 57. That's not that scary. Nothing too scary there. Let's just see if that recaptures zero. Okay, here was our other red flag, right? We talked about this as well. The divergence we had going on in the HYG, right? Junk bonds, they were heading down, and the SPX was heading up, and lo and behold, our divergence has worked itself out. I do not want purple on here. Let me get away. Boom, boom, boom. Okay. So there we go. Before, let's just do a duplicate. We were in lockstep. Here. So now it'll be interesting to see if we come back into this area, and if we do, what ends up being the plan from here. If we want to actually come into this area, then we find a bottom there. But SPY coming almost close to an interesting trend line. But that was our second red flag. Do want to note VIX futures here. Haven't seen this in a while. Contango, hello backwardation. Not by much. Honestly, I think this is just going to bounce back up. But you don't really see a move go from Contango to backwardation that quickly. So that's a little concerning. Usually it kind of goes a little bit slower and gradual process. But this was just a straight boom. But honestly, I think this is going to go back into Contango by the end of the week. Slight here, nothing good crazy. All right, we've got our VVIX volatility blasting over our 105, 100 level. Okay, as long as it stays over 105, got to consider that bearish, or at least the more volatility to be into the market. So as long as it stays over 100, 103, 105, all is good there for more volatility. So be aware of that. What happened here? I think we had a little rally in gold, in the dollar. So dollar finally started pushing up, finding some acceptance over that 87.93. Got back over that 98, right? This is what needed to happen. Beautiful breakout, made that higher high, came back to retest that structural break. boom, into our higher high. I think last week we did talk about this 99.30 here being potential target if these things did happen. Boom, there it is. Now we're seeing the sell-off. Let's see what happens if we get back into this 98, 98.50, 98.60 area, see if that bounces. Maybe we find some, build up a new value area here, and then maybe we can go ahead and make a new high, and we see $1, 100 again for the dollar. Rates coming down here under the 40 marker. Oh, excuse me, not under the 40 marker. Under the 41 once again. All right, let's see what happens if it's coming back down into these equal lows around 34 there. But if that's broken, probably going to go ahead and see that 4.0 mark on the yields. And if that breaks, well, we could probably get a little bit below that. So that'll be interesting. And we'll see what bonds do as far as that's concerned. Let's just take a quick look here. What are the short-term bonds here? All right, we were talking about this last week. If they're going to come back and retest these highs, yes, they did. Boom, came back up. Right, this is this being under the 50 is bonds are moving higher here. Being under the 50 here, this is our yields are weaker now. Okay, and look at TLT blasting off. As long as we hold over 90, certainly, but 89, 80. Okay, well, we should be free and cleared to see bonds come up into the 91, 80s once again here. So we could get a little pullback from here and then head back up. So everything's looking good for the bonds. But I will say bonds rallying here. Okay, market getting a little scared. We've obviously seen gold on the complete tear here. Flight to safety. What's going on there with the bonds and this coming up, okay, and gold. All right, well, we definitely have to be aware of that from maybe potential start to being a little bit more of a flight to safety trade going on once again. And let's take a look at the credit spreads and the rest of the bonds. Okay, credit spreads here. Boom, boom. Oh, okay. Well, this getting over the 50, that is interesting. I would say getting a little bit of a risk off reading here on both of these credit spreads, now getting over the 50 period moving average. So that is interesting. And this is just showing that yields should continue to fall and bonds should continue to head up. But risk on, risk off, starting to show a little bit of a warning sign. I think a warning sign here is definitely warranted to watch. LQD, just hang out. All right, a little bit of risk off signal there. So that is interesting. Take a look at the put call ratio. All right, see, I was noticing we were getting a little off the balance. Now we're back. Nothing really, no contrarian signal there. Like we weren't down here or anything, but definitely the snapback. This was the third warning sign, right? Last week we were looking. VIX never really breaking down under that 15 a couple of times, but not really in the 1575, right? We said hold 1575 as our pivot, and then we can go back in the video. Look, we're pointing to this area here by the 20, right? And here we did get that. So this VIX also was another precursor, to me at least, that potentially we're going to have that spike in volatility. With that being said, again, I have a bullish bias coming into Monday. That being said, now look where we are in the VIX, right? What has happened every time we kind of come into this area, right? Okay. So if we are going to reject on VIX, it's definitely a spot that it has historically done so before. What can we see? A pullback into the 19, right? If we can pull back into here, right, we could still just set us up for a nice push, right? So this would be our counter trend rally in the markets. We come into this area, and then from there, boom, and that's when we see the higher high on VIX, and we see the big major lower low on the markets, right? If we start to see price get back under 19, right, then watch out. We'll probably just sink down lower and the markets will repel up higher. So there you go for VEX. That's our plan. Stay over 19 would be the most bearish type of scenario, but do I think that we see a rejection here? Well, historically, it certainly seems like that would be the case. So, all right, that's pretty much everything I wanted to go over this week. Definitely a interesting and action-packed Friday. Wasn't expecting it. You never know. Even you've got these red flags, you never know when they're going to play out and if they will play out. But it is certainly worth noting. So I hope everybody was a little prepared, because we definitely did talk about these things last week. Either way, it was a great day for trading, and we've got some volatility back in the markets. So that is always a fun time to trade. All right, guys. Well, that's all I have for you. Thank you again so much for joining me. If this is your first time joining me on one of these market recap videos and analysis and game plans, well, don't forget, if you've liked what you've heard, subscribe to the channel. It is free, means a lot to me. Turn on those notifications. Again, any comments, any likes, thumbs up, really means a lot to me, and is certainly helpful for the algorithms on YouTube. Either way, thank you so much for preparing with me for the upcoming week. Remember, a prepared trader is a profitable trader, so plan your trades and trade your plan. I hope you have a great Sunday, and I will see everybody out in the markets on Monday. All right, take care.